First off, thank you everybody to coming to our first event of 2019. Hopefully this is as good a year as we had last year and even better. A couple administrative things. First of all, thank you to DocuSign for letting us use your amazing venue. DocuSign is offering everyone in the room a full year subscription to their product. As you exit, you'll see 2 iPads. You fill it out. I'm sure it's user-friendly, name, email, all the things you'd expect. Social security, another number, mother's maiden name, whatever it takes. So that's number one. Number two, we actually care what our guests think. So if everybody can, grab your phone right now. Let's just do this. Everybody grab your phone, go to CryptoMondaysSF.com. Great. Once it's in there, you'll see one of the links in the hamburger on your mobile device. It says Event Survey. In there, you'll find it's an event survey. It's an event survey. It's only about 5 questions. Please fill it out. It helps us sort of know how we're doing and hopefully do better. Also, follow us on LinkedIn. Right? We're not as good at the social stuff as we should be, but the more people that can follow us, the easier it is to send out messages when we're doing smaller events or. We do have a Twitter. It's the other way around, though. It's SF Crypto Monday. Just follow us any way you can. So before we start, I'm going to introduce Marina. She is part of the BFast team who help us out with all the live streams, which we're trying to figure out how to get it onto our website, too, so that way you guys can see all the archives. You can Google it, and BFast/ you can see all the historic events too, which is pretty good. So,
thank you, Bill. All right, yeah, my name is Marina. I'm CEO of BFast Media, and we help Crypto Mondays to build bigger community through commencing live stream of each time we have the event. So we use professional video cameras streaming now live, so our audience can get a really good picture, high quality HD image. So your audience can, really enjoy your workshop or conference at the on-comfort zone. So, live stream can be shared, of course, on all your social accounts, Facebook, YouTube, Twitter, but as well as can be embedded on your website. And if your conference is a paid conference, we can help you to protect the stream with a passcode. So only people who get who pay, they can access the live stream of your conference or workshop. And moreover, the live stream of the event will be available like instantly as soon as the event is over. Your audience will be able to rewatch the video straight away. So if you have any questions, feel free to reach out. I'll be here throughout the whole event. So thank you so much.
Thank you. All right. So you guys are all here to see ICOs are dead, and we'll find out if they're dead. I sometimes moderate, but they said that I wasn't good looking enough and asked me to step down. So instead of me, we have Jessica Schaefer of Bevel PR, who will be running the show tonight. Yay.
Thank you. Hi, everyone. So I guess I passed the good-looking bar. But more so, we just want to make it exciting and interesting. There's nothing worse than going to a panel after work and falling asleep with your wine and pizza. So that is what I'm going to try to do. I would love if the other panelists could join. But I'm the founder and CEO of Bevel. I was formerly head of media for Point72, which is Steve Cohen's fund, SAC Capital. And now we work with a lot of tech companies, fintech companies, and blockchain payments providers in this space. So I think that's why they asked me to moderate. But joining us, so we have Sarah Wei, who is the founder and CEO of Aegis. It's a crypto investment platform. Next to her, we have Mike Zajko. He is the head of sales for Coinlist. And we also have Kadeem Clarke, who is an investment manager with 8 decimal capital. So we're just going to go right in. The main question is, are ICOs dead? 2 documentaries that come to mind to me right now are The Fire Festival and R. Kelly, right? That's literally like all we're hearing about. And then if you look at the ICO world, 80% are potentially scams, right? Or that's what I've heard. So I would love to open the question up to the panelists on whether they are dead. And if they're not, are they scams and fraudulent?
Yeah, so as far as ICOs being dead, we kind of joked around in the back room that in order for ICOs to be dead, you have to fundamentally believe that the network usage token model is dead as well, so it doesn't work. And I don't think we've seen that yet or demonstrated yet. Right now, it's in a fairly experimental phase. So in unbastardized versions of ICOs, it was a way for people to sell network usage up front. You have incentivized models and zero margin or nearly zero margin business model protocol underneath it. The problem is that it worked so well that scams came around, and then everyone felt, well, I need a token as well. Is it on? Is it on now? Oh, there we go. Much better. So we had scams come along, and then you have everyone feeling, well, I have to have a token to do fundraising, and probably didn't make sense for that model to come in place because not everyone needs to have a token. So we've seen this massive pendulum shift. We'll call it towards the end of Q3 into Q4, where even new founders in the startup and crypto ecosystem stopped introducing a token into their network. So I'm thinking of things like DYDX, Dharma Protocol. They just said we don't need a native token. We'll fundraise via traditional means, and we'll go about it that way. So I think you'll see a lot of that. And then during this experimental phase of the next year, you'll be able to see, does this network token model work? And if it does, then it makes sense that we can do ICOs again in the future. But for the time being, I think there's going to be a little bit of a cool off. The other piece of this is there's a lot of teams that fundraised with a token in 2017, 2018, maybe a pre-sale, that they have their network going live. They'll probably do one more main sale. So we're seeing at Coinlist a lot of those types of teams actually preparing for one big final sale. It won't be as big as probably 2017 peak ICO boom, but still a way to get tokens out into a broad set of users' hands. And hopefully people that actually want to use these networks and see them succeed.
Yeah. So in terms of ICOs, I think that their initial use is dead. So ICOs were initially used as an investment vehicle to invest in blockchain projects. And I think that use is going to be dead. It really doesn't make sense. It's like going to Six Flags and you're buying tickets as an investment vehicle. So you're going to buy 500 tickets in hopes that people will buy them for $300 tomorrow when it's $30 today. So that model doesn't really make sense to me, but I do think that ICOs can still be used for utility tokens if they're used as utility tokens and giving people access to a platform. I think that when you look at different platforms like WeChat, or you even look at your airline miles, you have points, and those are essentially tokens. So what if there is an exchange where you could buy those tokens? So I think that use is definitely possible, but in the current use, I don't think it's going to survive any longer.
Hey, so just a little bit correction for our company. So I'm the founder and CEO of Aegis. We do mostly digital asset custody. And because of that, I think it's highly related to ICOs, because a lot of reason ICOs are shifting into security tokens are actually because of regulations. Actually, SEC has been really hard on cracking down ICO fundraising. Essentially, a lot of them are considered as security raising. So I think one of our core business for custody is that given people are doing securities offering, security tokens, they really need third-party custody providers. And the other thing we're seeing right now is there are more traditional companies coming into the space versus small companies that are trying to raise money through ICOs. And they actually have a broader use case or ecosystem versus a lot of companies that were doing ICOs are really like 3 people. When I was an investor before, and I think that's kind of like how it goes. So I think there's that kind of constraints when you are so young and the team is so small, but like you're thinking about addressing really large network. It's really hard to prove that. So I think for that end, as well as from the regulation end, we are seeing problems on that. But obviously there are new ways of fundraising and also new ways of building blockchain-based companies.
And so in terms of fundraising, where are you seeing either the investment money coming from? It seemed like some traditional investors were starting to get into this space. In the beginning, there were a lot of ultra high net worth people funding these projects. But now it seems to have dried up in terms of the capital, and at least from where we sit, we're seeing VCs and the equity funds put their money elsewhere. So where are you guys seeing these funds come from?
I think that is kind of going backwards to the traditional space. It's very much a lot of the projects that I'm looking at, they're looking for equity investment versus a token investment. So I think that these funds are coming from the traditional space again, where you'll see institutional investors and also the ultra high net worth individuals coming back into the space and supporting businesses that they think will be successful in the future.
I'm gonna go. So another part from Aegis Custody, I am also on the board of Foxconn's fintech subsidiary called Elecom, and they were doing a 500 million STO offering. So I think from the investor base we are seeing right now, I would say 90% of that are traditional financial institutions, investment banks, asset management companies, family offices versus like crypto funds. I think when we are seeing it, I think more and more traditional companies are coming into the space, and I think it's a few reasons. I think the STO offerings are generally much larger. Like for Foxconn is $500 million. For I think other companies like Lottery.com is also $500 million. So I think traditional financial companies have more appetite into larger round of fundraising, and then also given that this is projects backed by institutions, I think there are also more appetite from traditional investment platforms versus crypto funds. And I think another reason is also that I think if you look at the statistics, in average crypto VC funds were down 80%, so a lot of them have hard time raising another round of funding to even do investments. They also face a harder time for realizing their profits. So I think not just like ICOs are dead, a lot of crypto funds are also facing difficulties of even justifying their investment strategy to their prior investors.
And can you talk a little bit, and this question might be good for Mike, but what are they looking for? And when you list an ICO on Coinlist, what are you guys looking for?
Yeah, so it's probably good to take a moment to delineate slightly between native crypto assets. So for us, for instance, something like a Filecoin or Blockstack, and then also tokenized securities. So maybe it's a real estate fund or startup equity or something along those lines. For that category, probably the same companies that invest in real estate or same investors will go after that asset class. But they have to learn what it means to invest in tokens. So you have to do some education on that side. But they theoretically know how real estate works, and they should be able to value whatever assets they're considering. On the traditional, it's funny to call them traditional crypto asset side, we're looking at the same things that any investor would look at when considering an early stage startup as part of their portfolio. So you're obviously looking at the team, you're looking at the market that they're going after, the technology they're building, the community or traction they've already demonstrated, their track record. And then the other key piece to this that a lot of people got burned on in the last year is, even if you have a token for something that theoretically is an awesome idea and the team's amazing, is how does value actually accrue to the token? So we really try to understand the token model and how people make money. And just going back to the last question slightly is, we're in an interesting time where you have all of these early stage crypto companies that are being developed and trying to do fundraising theoretically. And then you also have teams that have been public, if you will, or they have a liquid token that can be bought on an exchange now, and they're showing traction. So you could say, okay, I can invest in this stablecoin project that is private and get in their pre-sale, or I can consider Maker and I can invest in that. Maybe the multiple is slightly higher, but you can see that it's working and it's showing some success. So that's where it's going to be tricky for teams now, because they're competing against projects that are out in the wild and working. And if you're an investor, you might want to go with what is already showing success. Given the prices have come down so much, there's an opportunity for you to invest at a low valuation.
Yeah, and I also think that a big issue for startups now, especially in the ICO space, is running out of money. And a lot of them might not have had the best financial officers in their companies, if they had any at all, and they kept their tokens. And they ended up losing a lot of money. So this is another reason why the ICO industry might have taken a hit in the recent too, I think.
So speaking of that, I think poor treasury management is a big part of the ICO failure. And the other thing we're seeing on the STO side is most investors are investing through fiat right now. And that's one of the reasons that Ether's price is going down, because previously investors are using Ether as a method to invest in crypto projects, and now people don't need to hold Ether anymore because you invest STO projects through USD dollar or euro and other fiat. I think that also makes ICO projects harder because they just don't. It's harder. Ether price has been down for 80%. That means just reducing their runway.
Yeah, and then definitely touching base on the STO side, I think that yeah, a lot of projects are using USD to raise money, but a lot of these platforms are designing it in a way where they had to use a cryptocurrency to raise the money too. So it's really interesting to see kind of where that's going to go into the future.
Can you talk about, so as we look into 2019, what valuations actually make sense? So a lot of them seemed overblown. I think also if you look in fintech right now, there's companies that are valued at tens of billions of dollars, which just seems a little bit ridiculous for a 5-year company. So can you talk about your perspective on that? Open to anybody.
Are these companies in general or security token companies?
I guess both. Like, are we going to see 5 times multiple, 10 times multiples?
I would say that right now, as I'm looking at projects, I'm typically looking for, if it's just an idea, then a valuation between $5 to $20 million. If they have licenses in the respective industry, then I would say like probably 40 to 100 million. And then anything outside that range if they have traction, then that's like based on their cash flow. But anything out of that range, I think it's not really appealing for anyone in the market right now, especially the blockchain VC funds.
Well, I think that valuation has definitely come down a lot. When I was doing investments in the first half of 2018, like a team with 5 guys were worth 60 million, and then 3 months later, you will be worth 300 million. So I think the valuation have definitely come down. And I think on the STO side, we see more projects that are backed by real assets. So I think the expected return for investors are normally around 8 to 20% on an annual basis. So I think if you just do some calculation, that's definitely a more normal valuation.
Yes, similar to public equities markets, there is a real dichotomy between valuations can be derived in a private market versus public market, where it's much more efficient due to price discovery from the crowd ultimately. So even startups in San Francisco that have nothing to do with crypto, when they decide to go out and do their IPO, they might find out they have to do a down round because in their private market valuation, they could get these higher values, but when they actually go out to sell it on a public market, they're not able to. Similarly, in crypto, there's this interesting situation where a lot of teams have fundraised. Maybe they raised in January of 2018, and they raised at a fairly high valuation. And then the market crashed, but no one's holding these tokens. Everyone's holding a SAFT. So it's not liquid, and they can still say, well, this is the value. So they can go out and try to raise at a much higher valuation than they would be able to if they were actually going into a public market, or if it was available on the public market. So it's a good proxy to say, all right, well, if you are for instance, a file storage protocol, or you're doing a decentralized marketplace, comparing that to something that's actually liquid in the market right now, and comparing the teams and saying, well, do I think it's more valuable than this other layer 1 protocol, or do I think you can get as high as Ethereum? And then you can kind of justify the valuation accordingly. But probably a lot of the private market valuations haven't caught up in the same way to what's publicly available on exchanges.
Yeah, I think a really good example would be Telegrams. I see a lot of companies that participated that, and it's like one of the largest ICO offering last year, but they haven't really issued tokens, so a lot of like private investors are trying to sell the private rounds at discount. So I think that definitely speaks to something like, as you said, yeah.
And can you talk about any advice you have? So you said, some people didn't have a great CFO. Maybe they had bad PR. I don't know. But what advice can you give everybody here as we look at the new landscape?
Well, I think they definitely have really good PR. That's why they have really high valuation.
I would say, I can give advice on the investment side for what we kind of look for as we look at projects. We're kind of talking about 3 topics right now. We're talking about ICOs, security token infrastructure companies, and then security tokens. So there is a long list of advice for all 3 of those topics. I would say for ICO companies, advice in general, dealing with ICOs and the way that I think the market is going, I would probably advise them to reconsider their tokens and probably think about maybe I'm not sure, how do you go back on a round and kind of change that. So I think there's a lot to consider.
You can do a recap, even Twitter did it.
Yeah. Yeah. The biggest thing is with the utility token, since that you're pretty much selling it to a community of global investors, it's pretty hard to kind of go back and make the changes. So I think that definitely, as a company that has done the ICO, there should be some reconsideration in terms of how you want to move forward with equity and the valuation of your business.
I'm not sure what the question was exactly, who I'm offering advice to projects or all of you. But I think it's already happening. You're seeing teams, fundamentally reevaluate how they should be approaching this business. If they should be introducing a token, does it make sense? And what I stated earlier is that we've probably seen this massive pendulum shift to the side of like, I don't want to do this. Like it does, investors don't like it. People are scared of it. Short of crypto funds or people that are really into crypto, people don't want to invest in it anymore. They don't feel like it has the appropriate protections that are in place that you get or that are afforded through equity. But in its purest form, if you have a open source network that functions with a token, then there's no reason to not pursue that option in the future. It's just, if you're only thinking about it from a fundraising perspective, you're thinking about it wrong. So there's a way to accomplish what you're trying to achieve, and an ICO isn't the way you need to do it. So for instance, LivePeer, they didn't have an ICO, or even you look at Maker, they didn't have an ICO either. I mean, they're selling Maker tokens right now, but there are other ways to build the network and then also fundraise at the same time. It doesn't always have to be aligned at once.
I think for us as a custodian player. We are actually an infrastructure player. We kind of enable the security token ecosystem and infrastructure. From the company building perspective, we are definitely looking to partner with other infrastructure players. For example, like the SEO insurance platform. And then I think this interesting part is if you are not an infrastructure player at this stage, you are actually facing a huge problem. I think every week there are companies coming to see me and they want to get acquired, because if they build a company that are tracking wallets about different blockchains, they're not, I mean, nobody's buying their services because it's blockchain, like the whole crypto market is only $300 billion. So if you don't really find a way to connect to the real financial market, the real economy, through infrastructures that are needed for the broader security offerings, I think the market is too small for them to even thinking about a viable business model. So I think from our point of view, we build companies because we are seeing the evolution of technology in the blockchain space is really revolutionized the financial services industry. So I think as a custody player, we build our own hardware wallet solution that are, and as well as our whole workflow software system that is going to custody blockchain-based assets, which we believe are going to be much, much bigger than what we're seeing in the crypto space. And I mean, there are people that are doing security offering platform. I mean, they are also part of like the ecosystem. So what I'm saying is, I think for a lot of ICO companies, when they build company, they don't really thinking about the business model. But I think for companies that are building real business right now, we're all thinking about what are the infrastructures and how can we play a role? What are the business model? How do we make money? So I think it's more realistic, and I think people also have to have a more deeper knowledge about the financial services industry, because I think essentially Bitcoin was kind of invented because they wanted to revolutionize how payments were done. And a lot of services we're seeing right now are also built because we want to change how financial services have been in place for like 100 years.
By the way, I didn't tell them what questions we were going to ask, so you guys are all doing great. I like to ask this question about to everybody, especially new clients. It just seems like there's so many people that have left very well-paying, high-profile jobs to jump into this crypto rabbit hole. So I would love to know why you all entered this industry.
Well, so I got involved in crypto in 2017. Things passed by so fast because people want me to invest in an ICO project, and at the time, the return were guaranteed. It's like you always get 3x return. So like you put in $1 million, you get 3 million, and that's how I kind of invested. And then I felt, wow, this is very interesting. Like, how can you make money like that? and then I graduated from Stanford Business School, and one of our alumni is the founder of Passport Capital, and they were also thinking about launching crypto fund of funds. So I got really fascinated about the space, so I go and help John, like the team. And then my current investor, Fosun, is one of the largest insurance company in Asia. They really, I mean, when I was at Passport, we also know that the reason crypto market couldn't grow bigger is because US institutions couldn't come into the space. And the reason is because there's no qualified custodian in place. So my current investor also see that problem, so they asked me to come out and kind of see, we closed a Series A with them. So it's kind of like how I got into the space and really have a deep knowledge about the overall crypto space, because when I was an investor, I looked at 80 different crypto funds, and then we deployed capital in 11 funds, and then we also look at like the ICO projects, and then found a really good pinpoint in the custody business, which I think is really strategic as an infrastructure play.
Yeah, so anytime there's a large platform shift in any industry or something that's entirely nascent and new, it's an exciting place to be. Not only because there's outsized opportunities to be successful in it, but it's unproven. There's no rules. You're creating things. It's the first time you're actually doing anything. So even if you don't want to have to be in an industry where it's like, well, this is how it's kind of always worked, and these are the power players, and you have to work within that construct. That made crypto to me pretty attractive. It was also one of those areas where like the incredible risk return profile. So it doesn't work out, okay, like you go do something else in San Francisco. It does work out, like you get to be a part of something that could be fundamentally change the world in many ways. And we don't know yet. Still very experimental, and usage numbers aren't great, and people are getting discouraged. But the risk is, in my opinion, much lower to just stay in something where it's like kind of always going to be the same than try to experiment and learn something new.
Yeah. I think I also had the same reasoning for entering the space. So I ended up in the space back in mid-2016, so I started doing some investing during that time. And then afterwards, in late 2017, I joined a crypto project where I was doing business development and then also coming up with the strategy and kind of what we wanted to do. So I worked with that project for a bit, going into graduation, and then I moved here to work for Bank of America, Merrill Lynch, and I was there for 4 months. And in traditional banking, I just didn't really like it. I felt like I was spending the beginning of my career working on something that's dying. So so when I first got here, actually, just to backtrack a little bit, I actually met with someone who interned for me back in college, who is the founder of the fund I work for now. And I went to get investment for the project I was working on, and somehow he convinced me to work for him after that meeting. So I started working for him, and after being an investor for a little bit, I realized the project I was working for is not going to do that well, in my opinion. So I decided to quit that project. And this is all while working at Merrill Lynch. And then I pretty much quit Merrill Lynch and came over to 8Decimal full time, where I'm now investor in the space. And then I'm also working with 8Decimal on doing some security token advisory services for traditional businesses.
Cool. By the way, I think this is the most diverse panel I've ever seen in fintech or tech ever. So congratulations, Crypto Monday guys, for actually putting that together. So I want to open it up to questions in the audience. I want to ask one more question. So everybody think of a question, or I'm just going to call on people because it's very hot up here.
Can we talk about security tokens?
But the last question, so in order for mass adoption to happen, what do you think needs to happen, and what new technology will we see this year?
Yeah, mass adoption. So probably it's going to occur from an extension from a pre-existing business line. So a lot of people look at gaming as a big opportunity, and that could be an area where if you introduce a token into an in-game economy that already exists, that would allow people to understand how tokens work and wallets work, and it might not be a purist decentralized network. So if you're plugged in on crypto Twitter a lot, like people are like, it's not decentralized enough, and people complain about things, and some in order to get to mass adoption, it might require that something isn't fully decentralized. Maybe it has a medium medium ground there. So a lot of people talk about gaming. I think that's one big opportunity for it to be introduced to a broader audience. But beyond that, I think once you find use cases, for instance, in the decentralized finance space, so if you can earn 10% yield on holding DAI on Compound, and someone says, you know what, I've got $50,000 in the bank, and instead of earning 0.5% from Chase, I'm going to convert that into DAI. I'm not worried because it's a stable coin. It's going to stay in place, and I'm going to earn much higher yield on that. That starts to get people like, well, that's kind of interesting. Maybe I'll do that. But you're going to start to see like these slow hooks come in where people become educated and start to say, well, this does add value to my life. I'm not just doing it because it's a decentralized thing, like because those incentives aren't great. And another area where people get caught up on a lot in this industry is the idea of privacy. And people should care about these things because of privacy. Maybe we should, but if you look at something like Edward Snowden comes out, there's all these spying, but people continue to use all these tools and services that are centralized because they're convenient in their lives and makes it easy. I'm sure if you look at this crowd, and we're all probably interested in this space, everyone is using Google Docs because it's easy and everyone else uses it. So you're gonna have to find things that are fundamentally much better than the pre-existing, or it has to be entirely new.
Yeah, I definitely agree with your viewpoint. I guess to touch on the last part, and then I'll touch on the beginning part. I think the last part with privacy, honestly, I think maybe I'm a little bit too comfortable with the amount of data that's collected about me, but I think that blockchain is definitely helping out with giving people privacy while also allowing for data to be used in a good way. But in terms of, I guess, what was the question again?
How do we get to mass adoption?
Okay, how do we get to mass adoption? I think that mass adoption comes from just not knowing about it. I think that we spend too much time focusing on blockchain when blockchain really isn't that like notable. It shouldn't be the front line of the show. When you look at kind of like the revolution from mail to email, people focus on the benefits. A lot of us don't know how emails are sent or how that whole process works. So we shouldn't really know about how the blockchain dApps that we use work. I think that the best thing to focus on is just the benefits of the product and what it brings to consumers. And that's something that I look for in blockchain projects moving forward. And I think that's going to be really key in mass adoption, is just like hiding blockchain. There's not really a need to know about it, I think, moving forward. But in terms of the technology this year, I think that will have a powerful impact. Definitely looking into the financial space and fintech. I'm really excited to see how stable coins develop this year, and also how security tokens develop this year, and how they're being used to raise money for traditional assets. And I agree with you where you say it's gonna, or you didn't say it exactly, but it's gonna be a evolution versus a revolution, where we're not trying to be we're not trying to fight the man anymore. We're actually trying to make some progress and focus on what's possible given the circumstances and the structure that we have around us. And I think that it's going to be baby steps going into the future. And then decentralization is not that important. I think, in my point, I think it's an oxymoron, to be honest. If a company is making a decentralized platform, then it's centralized at some point. So I think that really just focusing on the benefits of blockchain is the key thing, rather than kind of fighting the man right now.
So we'll do some questions. I have the first question because it's my show. Two comments. One, ease of use. So Grin just got launched. So I signed up to Galleon or whatever. I can't figure out how to buy a stupid Grin. So it's not easy yet. On the other side, though, my mom, who's 67 years old, emails me, just watched a documentary on Bitcoin. Have they found that Satoshi yet? I said, no, not yet, Mom, but I'll let you know when they do. So my question is, I heard a podcast, so I'm basically an expert. And in that podcast, they said one of the kind of opposing forces in ICOs is that one of the reasons you ICO is to get your token to the users, the people who want to use your thing. But the people who participate in ICOs aren't the users. They're rich people who want to buy digital bets. How do you square that up? That's a question for you all.
Yeah, I think that's fundamentally the challenge that we're in right now. So You even look at Ethereum. So Ethereum, they launched their ICO in 2015, and the community around crypto was much different then. You had people that are genuinely interested in seeing this world decentralized computer grow and develop. And maybe they didn't have a usage for Ethereum at that time, but they're like, this sounds cool, like I want to be involved in it. So just like a very different profile. And now it's, well, these are going to accredited investors only, and the way they're being pitched is to investors only. So I think it's definitely a huge challenge. I'm not sure I know the answer. A further challenge of that is if these are defined as securities moving forward, so everyone's like worried about what the SEC, what the rules are, then how do you ever get out of that cycle? So if it's a security and 1 year after, that you have the 1 year lockup, the tokens are distributed, you can only trade them with other accredited investors. And then if you're a crypto fund or VC, like, what am I doing with all these tokens that maybe I don't have a use case for? But you can't sell them out in the open market because you can only sell them to accredited investors because they're securities. So huge challenge. That's why there are, the potential ripping apart the fundraising component with the distribution of tokens. So people experiment with the airdrops or these other proof of work models. Again, I mentioned the Merkle mining from LivePeer. So I think we'll continue to see experimentation on that side. It's not like ICO is still a great way to do it, but yeah, you have the conundrum of, are people actually going to use these tokens that that they're buying?
Actually, so I can take this. So one of our custody clients is actually NGO focusing on digital health record. They are probably the largest one in Africa and India. So with like 2 million population. So what they're actually doing is converting what's in the real world in the blockchain space. So they already have the users, they already have the data, and now they are using tokens to incentivize patients as well as research institutions for like incentivizing them to come back to the network. So I mean, there are real companies, real projects touching real people using blockchain, and that's how you see real impact of blockchain.
And I could also just touch on that point really quickly. So I think that really going forward, the key thing will be kind of separating the utility token from the investment vehicle, and having the utility token maybe not necessarily being on an exchange and being on another platform so that it's not possible to get to make money. Yeah, exactly. So I think taking it off of investing exchanges will be a good idea, and then separating that from your investment token would also be an option.
So then when moon?
I'd like to know if you guys had looked at this as a parallel, because I kind of see this as an investor for 20 plus years who helped the Fed fix things in 2008. I kind of see ICOs, and I'll get to the question there, as the Jobs Act and when they used to have like penny stocks. And people, if they had real revenue and real companies like we did at Cisco to Apple, they could get higher valuations and people would hold the coin or the shares or whatever the option is, like it is in the financial markets, and an option, the ability to buy at a certain price. Now, after we realize there are going to be abuses like the fast first movers are always going to make and things are going to happen, they're coming in the second stage, which is the direct public offerings, DPOs, like the B Corps are doing, where non-accredited can put money in. They get things called a dividend or a return rate, like other investments, and you can then baseline it with a 10% value to 20% or more of best-in-breed investments that have a risk ROI that you balance like anything else. And you better look at that, because with the Rothschilds coming in and attacking coins, if you're not as efficient, you're going to get Sorosed. So how do you see a model coming out where maybe revenue can come from actually offering value, and ICOs can be seen as ways of getting them into stakeholders that can protect it, like early equity does in a company? I mean, like, what do you see around possibilities around that? Because the valuations are going to keep dropping otherwise.
Yeah, so...
Rothschild's all I heard.
So I think that I think that definitely revenue is something to consider for companies, but I don't think it's something that's going to be applicable for these types of businesses that are more so on the startup side, since they don't have existing revenue and they're not a B Corp.
Like our guys at Apple, we have companies, blockchain ones that already, and other holochain and others, who already have revenue.
And have they qualified for the DPO?
Remember the B Lab guys in Oakland? That's where holochain sits.
Mm.
All of them. That's why the Jobs Act changed.
I'm going to be honest with you, I haven't heard too much about DPOs, and I think that's probably because it's not something that's getting accepted for these types of businesses.
Almost 1,000 have been done. California sleeping. They just don't talk about it in New York because you're getting killed with the Jobs Act stuff. We'll talk about it.
Okay.
That's an offline one. Offline.
Okay, but I think that definitely in terms of the revenue side, as we have been doing work with some of our clients in China who are doing offerings for investors of traditional assets that actually have revenue that's consistent and reliable in the next coming years. They're more so just doing a traditional raising using Reg D. Then in the future, once the SEC decides to start looking at the projects, Reg A+, and then Reg S is something that we're using right now too. So.
Wait, that's a second question. We're moving to the next question. Back
yeah,
here.
let's move to the next question.
Yeah, I got a question right here. Offline. You guys are going to offline.
Hey, this is a question first directed to Mike, but anyone on the panel can feel free to answer. You spoke before about how a lot of coins aren't effectively capturing network value. Can you speak to maybe one example that does, that isn't money? Maybe one example that really doesn't, that's a major project? And also curious to hear the rest of the panel's thoughts on examples that capture and don't capture network value.
So tokens that do capture network value or don't? Yeah, I mean, one on the doesn't side, and I love the project, love what they're trying to do, but I think everyone's read quite a bit about 0x and that token model. It's more of a governance token, so it doesn't the value doesn't really accrue there, and then you don't necessarily need to use 0x to use the protocol. So and then you're hearing other teams forking the 0x protocol and just going out on their own. So. That would be one on the doesn't necessarily accrue side. On the accrue side, and it's not a publicly listed project yet, but we talked a little bit more about the stablecoin project Reserve a little earlier. So if you look at Reserve as a stablecoin, and then they also have Reserve shares. So value will accrue to the Reserve shares based on the collateralized assets or the assets that are backing that. So. Really interesting project, definitely one to look into, but that would just be one example on both sides.
Well, I think the best use case of network is really Bitcoin. I mean, we don't want it. I mean, you can't forget Bitcoin is started because a social experiment, right? So I mean that. Given the value has come up so much, I mean, that really proves the value of network. I think Ethereum. Do you have any examples that aren't a type of money? Like payment or like store of value? Yeah, so any examples that like accrue network value that aren't? Well, Ethereum is another workable model, right? You have a whole bunch of people that are building apps on top of that. You have different usage of tokens building on top of Ethereum. I think that's definitely a valid use case of the network.
Sounds great.
Thank you. Appreciate your talk. It's been fantastic. If you took a 5-year time horizon and I gave you $50 million to invest, where would you put it with a 5-year time horizon? And it could be a couple different silos or buckets. But I'm just curious what you're seeing as the opportunity today. Plastics. Could be.
Well, we're running a custody business. We're definitely very bullish on that. Okay. Thank you, guys. Leave it there in
custody. I would say CBD if I had to pick one.
I can drink the whole thing. Nothing happens.
Just saying.
Well.
So that sounds like close to the size of our fund and our horizon too. So I would say that I would put some of that in tokenizing cannabis farms as to your CBD comment right there. I'll also put some money into some security token infrastructure projects. Maybe not some of the ones I've seen right now. Yeah, definitely there's some I would put in right now, but not at the top of my mind. And then,
sorry, why is tokenizing, like why tokenize a cannabis? Why not just invest in the cannabis farm?
Because you need to protect yourself from the risk of it with the federal laws change.
you could do that with the traditional space too, though. So you could protect yourself from the federal laws using LLC in the traditional space. More so, tokenization allows, I mean, we haven't gotten the benefits of it yet, but we'll get it in the future in 5 years, where you'll be able to raise from international investors, and then also you'll have more liquidity for illiquid assets. And I think that's the key thing for tokenization, where it's supposed to change the way that we invest in things going into the future. So that, let's say you own this chair, you can tokenize this chair and trade it with someone around the country using a platform. So that's why tokenization is really important, in my opinion.
All right, got another one right here.
This one's going to go really easy on you. Hey, man. Okay, so I think you guys did a fantastic job of covering utility tokens or security tokens and the ways that the economics around that needs to transition. And I think that's clear, right? Like, regardless of whether you think the values are too high or too low, like there's corrections that are happening and we're not through the woods there. What happens outside of the economics? So on this panel right now, we've got investor, but primarily token investor and advisor. So that's one tertiary business. We have Bevel PR, which is a PR group of which, forgive me, I'm not personally familiar with you, but we also know that there are traditional PR groups that got into crypto, but there's also like 8 million PR groups that popped up. We've got Coinlist, which is basically a listing platform for ICOs, which we're discussing the death of currently with you on the board. And so, but despite that, behind all these companies, there's also still, to the earlier comment about people jumping from traditional industries, a lot of really, really smart people, a fair bit of capital that's still floating around, some really solid organizations that have been created. So how does all this stuff around the ICO craze evolve if it is in fact dead? And forgive me, I just wasn't here to hear what Zajko did, so I would have made fun of you too. I just didn't remember. Pardon.
In terms of the evolution, I think that it's more so inside here. It's in everyone's minds inside this room. We're not here sipping on champagne right now for a reason. And I think that's the key thing, is like in the beginning, the crypto market was all about, okay, we're gonna make fast returns, we're gonna make a lot of money, we're gonna spend our money, we're gonna show how much money we have, we're gonna fight demand, we're gonna do all these things. And I think that money talks more than us. And when we were losing our money and we were realizing that the stuff that we were investing in was bad, then that's when we came to our senses and had to realize, okay, like this market needs to mature, and it needs to definitely do a better job of progressing the blockchain industry by focusing on the more mature projects. Like looking back into November 2018, we lost a large chunk of projects and funds for that reason. And I think that really, the downfall of the ICO market has really made us kind of wiser moving forward. And like, definitely we've learned from our mistakes.
Yes, right now, most companies in this space are trying to build a startup in a startup ecosystem. So if, 90% or 95% of startups fail, and then you operate within a startup industry that is still trying to figure itself out, it's multiplied by a factor that even more of these companies will actually fail and will go nowhere. But some of them will, and from that process, we will evolve, and auxiliary services will have to service them like they are today. But we're much further along than we were the last time a bubble collapsed. You know, there's way more serious institutional, I don't want to say institutional money because everyone's been talking about that forever, but real quality infrastructure things going on that presumably will turn into something down the line. So it might not, in 3 years, 5 years, wherever the date range was, it probably won't look like it does today, but I'd say it's evolving now, and it will continue to do so.
Well, so we do custody for digital assets, by the way. Well, I think if you look at how digital assets are created and the next phase of economy we're entering, people sometimes call it like the smart economy, meaning that not only digital assets, internet are being tokenized. Even for physical goods, they can be tokenized, meaning that they can have an ownership. So your title, your data can have an ownership, and when you have an ownership of data, that's assets that have value. So the world we're seeing in the next phase of economy is the smart economy, which means that you can tokenize everything and assigning ownership to those assets. And then what a lot of us are building right now is the infrastructure to allow those tokenized assets to be able to trade, to be able to secure, to safely secured, or even to build services on top of that. So I think that's part of the amazing things that blockchain has contributing to the society, is that we're not only are able to have internet companies, now we are able to own the things, the data we generated. So a lot of services are being created. For custody, you can think about it's such a traditional business. Like you have that for like over hundreds of years to just put your assets in a bank. But right now, because the assets you're putting in the bank is not a painting, it's actually digital asset. So everything related to the infrastructure has to be recreated, right? We have to create a hardware wallet because we have to store private keys. We have to create the workflow system like an online banking because we wanted to assign role and responsibilities across people in our organization. We have to deal with on-chain multi-signature because I think everyone knows like all the assets on for all the blockchain assets that are secured in the cloud. Like, so we have to deal with network and security. And that's just part of custody. And if you're talking about like token issuance platform, they are disrupting the most traditional investment banking industry. Like you have so many investment bankers, lawyers, like sitting in the office doing like IPO, PPM, or drafting. But that can be done very quickly with smart contracts, right? And then like company like Polymath is offering to do like token offering for $15 versus like if you wanted to do an IPO in New York, that costs $4 million. So a lot of new services are being created because the economy we're entering is gonna be quite different in the future. It requires different infrastructure, it requires different services provider, and it requires different players in the ecosystem.
All right, we're going to do the last question. This is going to be the best question ever.
It's going to be amazing. It's actually going to be a simple question for you mostly. First of all, thank you for the discussion today. It was brilliant, super interesting. So first of all, I really love what you guys over at BitGo do. I'm a user myself. And what I wanted to know is basically if when you are looking at introduction of institutional investors to the space, are you seeing a lot more companies coming into play and starting to use custody solutions, or is it something that is still not very much in use and widespread?
So for sure, I mean, first of all, if institutions are offering security tokens, it's kind of required to have a third-party custodian provider. So as I mentioned, like for Foscom, right, they're doing a security token offering, and then we are their exclusive custodian provider. And our CTO right now is actually in Japan, meeting with SoftBank, and then another bank we cannot disclose in Japan. So definitely, I mean, you're seeing a lot more traditional players coming into the space. You're seeing like banks coming into the space. And then we're also working with other companies that tokenizing like real estate assets. So we only deal with institutions. Obviously, we also work with crypto funds that wanted to do custody, but they're also institutions. So definitely more and more institutions coming into space, and also because like custody requires more money. Like we do take and so that's why institutions are more affordable of this kind of services.
All right. That's the end of our show. Yeah, you guys did great up here. You guys are going to be surprised about this next thing. He caught me at the right time, and he said, hey, you mind if I have a minute? I said, yeah, you know what? You can do one. We'll give you 60 seconds at the end. That was before I heard his Rothschild question. But that being said, I'm going to give you 1 minute.
I only need 30 seconds. Hey, Kareem, do you guys know what's wrong with the internet? Check out the overweb. It's the solution. We just announced it Friday at Google's SF, the largest developer in the world. We're about to go to the EU as their awardee for the Next Generation Internet Award for what we're doing with our company, Bridget. And if you want to know what that is, look up our Twitter, look up the overweb, go to our actual YouTube, and we'll give you access to the alpha if you find the Easter egg on the YouTube videos. Oh, by the way, last, if you mention it to us, we'll send you a free pass for Developer Week, where we're opening up the kimono on not just our alpha, but our beta, the 20th. It's a $300 thing. Just message us, and we'll send you a free pass.
All right, that was great. Hey, last thing, everybody, please take the, you guys can go, take the survey on the website. It really helps us out. And follow us on LinkedIn. Thank you, everybody. Thank you, speakers, very much. Thank you.